Hey, it's Nolan Mathias from Mortgage 360 coming at you with what we're going to call the coronavirus mortgage update. This is going to be very raw, very unedited. We're going to basically be putting up videos as we get new information on what's happening in the mortgage world, because obviously we're getting comments on our YouTube channel, we're getting calls from our clients. Everyone's wondering what the heck to do. And the answer is, we don't know. It's on a day-to-day basis and things are changing rapidly. So we want you to use this YouTube channel and this video source as a means of getting updated on what to do on your mortgage and in the our updated mortgage information. Like I said, this is going to be unedited. So if you aren't already, subscribe to the channel, hit the notification bell. Normally we're saying that out of vanity, trying to get a few more likes and a few more subscriptions. But in this case, I think it's important that you have access to the most up-to-date mortgage information you can get. And that is my service to you going forward, is we're going to make sure that the most up-to-date information we can provide is going to be available on this channel as we get the as we get the information. So let's start with this. At the end of the video, I'm gonna talk about what I think you should do if you're still employed and you've still got options in order to make changes to your mortgage. But before we get to that, let's talk about what's happened in the last couple of days. Over the weekend, Federal Reserve Bank in the U.S. lowered its rate to 0, which is somewhat unprecedented. The media's talked for a while about interest rates going negative. I didn't think we would get to 0 as fast as we did, and lo and behold, we are there. At the same time, on Friday, the Bank of Canada came out, lowered their rate another 0.5% from 1.25% to 0.75%. We hadn't heard until just a few minutes ago. This is being filmed at about 2:30 on Monday here. We hadn't heard until a few minutes ago whether the banks were going to go ahead and honor that further discount on their prime rates. So far, RBC, Scotiabank, BMO have come out and said, yes, they are going to honor that lowered rate. So if you have a line of credit or a variable rate mortgage, you have pretty much instantly got another 0.5% discount on your interest rates. That is a 1% drop literally in a week, which again, absolutely unheard of. Now here's an interesting thing. Fixed rates went down to 2.34 last week. And because they got so low so fast, all sorts of borrowers have gone to the market and decided that they want to make changes to their mortgages. And as a result, there's massive demand for these low 5-year fixed rates. And subsequently, the interest rates are going up because of the demand. Obviously, there's only a finite amount of supply of interest rates that are that low. So as they get swept up, interest rates are starting to increase. And that's making the 5-year fixed money more expensive. Right now, we're probably up about 0.15% from where we were on the lows last week. As far as, what to do if you're in a situation where you might miss a payment or where you need some payment relief, CMHC, Canada Guarantee, and Genworth came out over the weekend and said that they are going to allow for potentially up to 6 months of deferred payments and complete reamortizations of loans, so extending them back out to a 25-year period. This is going to be on a case-by-case scenario, and obviously the first point of contact on this is your lender. In the description below, we're going to put a link, or not a link, but a list of most of the major lenders in Canada, so you can find their phone number and contact them directly. I recommend that if you think or foresee that you're going to have financial problems in making your payments, to contact your lender sooner rather than later. Get on their radar before everybody else does. And just make sure that you call them before you miss a payment. If you know you're going to miss a payment, get on the phone with your lender and say, this is the scenario, and let them help you. If your mortgage is not insured, then it's going to be based on lender discretion. Most big banks have skip-a-payment options. Most big lenders have skip-a-payment options. The ones who don't, we're hearing that they will basically allow, on a case-by-case basis, people to miss payments or put payments on hold, we don't think that any lenders want to be in the business of foreclosing on properties in a time of crisis like this. So, good communication matters, and that's the best thing you can do right now is be in communication with your lender and let them know what's going on so that they can help you. They want to help. Saw a quote this morning from Mr. Rogers that basically said, when he was a kid and he saw bad things on the news, his mom used to always tell him, look for the helpers. The lenders in this case, for the most part, are going to want to be the helpers. So reach out to them and let them help you. As far as the changes to the stress tests that were announced earlier in the year, we can kiss those goodbye. The finance minister has said that those are being suspended and no changes will be made. So we'll still be qualifying at benchmark rates. OSFI has ended its consultation period on them changing the stress tests for non-insured mortgages. So, our existing qualification environment is going to remain our existing qualification environment. Those things are gone. And, we think it's a good time to start budgeting. What we're going to do is I think this is probably a really good time to start budgeting. In the description below, we're going to put a link to our 3-month budget, which basically is really simple. How it works is you go through your last month and you write down all of your expenses, and then you fold over the page and use that previous month to plan for the next month. And, go through, find the subscriptions, find the things you don't need, really sharpen your pencil and try to get rid of as many expenses as possible. If you can support local businesses, but anything like, that extra Crave subscription or that extra Netflix subscription or those things that you really don't need to be spending money on, cut those out of the budget right now. Every dollar for the next little while is surely going to count. So let's talk about what we think you should do if you're still employed. If you're still employed and you have a mortgage over 3%, and it was previously insured, we definitely think you should be looking at getting your rate lowered, switching to a different lender, and taking advantage of the low interest rates just so that you can minimize your penalty. This isn't about us doing an extra mortgage or making an extra paycheck. This is about minimizing your monthly payment obligations. And if you can take advantage of lower rates, we suggest you do it and do it sooner rather than later, because there's a good chance that interest rates, 5-year fixed rates, are going to continue to go up as the funds become less and less available. If you're fortunate to have more than 20% equity in your property, highly recommend that you not only look at lowering your interest rate, but also going and re-extending your amortization back out to 25 or 30 years. You may even want to look at pulling some additional funds out just in case you run into a situation where you need them. And again, this is all designed to minimize your payment obligations and just make it as easy as possible to make it through the next week, month, or 6 months, depending on how long this thing goes on. Again, though, it's important that you do so quickly, because these interest rates, the 5-year fixed deals that we're seeing out there, could go away. We're not saying this to try to get you to do something and do it quickly so that we earn an income. What we're saying this for is because you very well could not see these interest rates available in a week or a month or even tomorrow. So if you are in a place where you can get a lower interest rate and there's lower interest rates available than what you have, reach out to us, reach out to your broker, reach out to your banker, and try to get this done as quickly as possible. Brokers and bankers are busy right now. They're seeing lots of people do exactly what we're talking about. So you want to get your application in and make sure that you're not, 3 or 4 days behind everyone else, because those who get the applications in first will be the first ones served. We'll put our easy application link below so that if you want to apply, you can apply right now. It takes 5 to 10 minutes to fill out that application, and quite frankly, we've all got a lot of time on our hands right now, so take advantage of the low rates and the ability to make these changes now. I don't think you'll regret it a week or two down the road. So again, we're going to be doing these videos on a fairly regular basis as we get new information, as we learn more. Again, subscribe, click the notification bell in order to be the first to know, and we'll try to keep the information on here as transparent, honest, and up-to-date as possible. Obviously, the transparent and the honest part are given, but as up to date and as real time as possible will be my commitment to you and my commitment to serve. So thanks for tuning in. If you have questions, best way to ask them is through our website, mortgage360.ca, and we are happy to help and honored to serve. Cheers.